do you need a finance degree to day trade successfully? Can you answer that for us?
Definitely not.
Oh, okay. Did it help at all?
So for earnings, I like options because the returns can be very, very high, especially if you find something with a high delta. So that Chegg play, it costs around $100 an option.
Okay.
So that means for every dollar Chegg moved down, I was basically making 100%. Trusting the levels is the biggest thing. You gotta plan it. But I like always say in chat all the time, plan it, stock it, execute it.
What could possibly be cooler than banking 5 figures trading profit as a high school student? In this episode of the Humble Traders podcast, you are going to learn from a 25-year-old trader who has been trading part-time since he was only 18. True story, I met this trader online and formed a trading group with him almost 7 years ago. And I found out much later that he was only in high school at the time. When his peers were still climbing the ranks on League of Legends, this high school student, Adam, had already been making money to pay for his college tuition. Welcome, Adam, to the Humble Traders podcast.
Hey, thank you for having me.
Yeah, we've been talking for a few years online and via Discord, but this is my first time meeting you in person, so very honored to have you. You're definitely one of the youngest, but also a baller trader that I know, so I'm really honored to have you here.
I appreciate that.
I
was going to say, it's a pleasure if you have me on the show. Very excited to meet you. You know, we've talked so much over the years, and it's awesome to see the face in person, and I'm excited.
So Adam, tell our audience, what kind of trader are you and how do you make a living out of it?
I'd say I'm more of an opportunity trader. So I like to look on the outside world, kind of just generate ideas, whether, I'm going for a walk, traveling. I always like to look around and be observant of kind of trends I'm seeing in the real world. And then I go to the markets and use financial instruments to try to, capitalize on those.
Okay, and what kind of instruments do you kind of lean towards? Stocks, options, or?
So I started with stocks, but once I found options and realized the power they had with leverage, I really started focusing on that. Although they're a lot more difficult than regular stocks, if you can find your edge in them, I realized that you can kind of create much bigger returns as opposed to regular just general stocks, as well as being able to kind of hedge positions. So if I had the capital that would cost for one stock trade, I could put on 2 or 3 option trades with the same amount of capital. So mainly options and then a little bit of futures trading as well, more recently.
Oh, I see. You started with stocks. Okay. I think that's most people, especially from the community we were both in. Everyone started with stocks. And I think it's very interesting to see where everyone went. Yeah. So moving on to present day. I know you mentioned nowadays you're more of an opportunities trader. Can you talk a little bit with us about what that means and how do you spot opportunities in the market in a general sense?
Yeah, so I like to just see my general life, say, when I first got into oil, I was traveling to Canada actually.
Oh, okay.
And I saw a bunch of these oil shippers. I never saw them around where I'm from on the railroad, but a bunch of oil. So I was like, oh, what's this company? So I started looking into it. And that was when I started getting my first oil trade. I ended up going to XOM after reading more about it. I'm like, why is there so much oil moving back and forth?
Okay.
Another way I'd like to describe it is clothing. So I'm into fashion a little bit. This past year, old money's been a new trend.
Yeah.
So it's kind of something like this shirt, for example.
Something simple, no logo.
Yeah, no logos, simple, light colors where they're just very plain, blacks, tans, everything to that extent.
Yeah.
I was like, all right, who's making this? So I go in the mall.
Okay.
And sure enough, you walk down, Abercrombie Fitch is actually changed all their stuff to it. Oh. So you go into Abercrombie Fitch, you can see basically clothing like this all over the place. That, kind of had me thinking is there an opportunity here? Abercrombie Fitch is traded on the stock market.
Yeah.
If you look what their earnings have done the past 2, they've exploded.
Yeah.
Absolutely exploded. And that was just me noticing, being on Instagram, seeing everyone posting wearing this type of clothes, seeing that the trend this year for back to school looks like this. Kind of just seeing opportunities like that. And it also gives me some conviction as well as I see it literally with my own eyes.
Yeah.
Sometimes when I'm trading gas and oil, I'll go to the pump and I'll see it's $5 and a month ago it was $4.40. I'm like, oh, wow. These companies, they have their oil reserves from months ago. They're not paying more for oil now.
Yeah.
They already have all this oil. So now they're just selling it at market price, which is way higher. That's like another way where I'll start to see it around me and try to put some capital into it as well.
I see. So you see these opportunities in real life, and how do you actually execute on those opportunities?
So from seeing them in real life, you have to kind of see, all right, am I just seeing something here, or is there actually an opportunity? Is there any vehicle I can get in to maximize on this? So from there, I'll kind of look. If there is a stock, now I'll look at the stock, see where it's trading at. Is it trading at highs? Is it trading at lows? When are earnings coming up? Is there any news that's out there? Because sometimes companies will put out a news report and talk about something that's happening in 6 months. Or you go into SEC filings, which I used to love doing, and you can really find some dirt on some companies, see something over there. So I'll do my due diligence like that. And then I just usually wait. Sometimes, recently, ChatGTB, this was probably my very recent trade. Chegg is a company I used to use all the time for school. So after I do my homework, I like to check it to make sure I did good. So Chegg is basically like a tutor for you, online tutor.
Okay.
When ChatGTB came out, Chegg, everyone's just using ChatGTB as ChatGTB is free and Chegg is a paid for service.
Oh, I see.
So, Chegg, you'd pay $15 a month. If you needed help with your homework, you could ask an online tutor and they'd help you with everything. Now, ChatGTB came out and people are just going to use that because it's free. Who wants to pay $15 a month when we can do it for free?
Oh, yeah, makes sense. Okay.
So I was doing the earnings calendar like I like to do during earnings season. I saw Chegg was coming up. Sure enough, their earnings was coming. And I kind of had the idea. I'm like, ChatGTB, they've been dominating it. It's everything I see online. Everyone I talk to, they're talking about trying to make $1 million using ChatGTB. So I realized, wait, this is going to take out Chegg completely. They're going to be ruined. This is a free service doing a better job answering students' questions than the paid for one.
Okay.
Earnings came out. They dropped nearly 50%. Had some options on that, 1,000% overnight.
Okay.
So that's like kind of that trade, though. I saw it on the earnings calendar, and earnings was in 2 days, so I really had to just get right on it.
Oh, so how did you decide at that point to either take options, the put options, or take the actual short on equity? Like, how do you decide which instrument to play?
So since I came across options, especially for earnings, at the end of the day, I'm only risking what I put up there. So a short position, God forbid I was wrong and that thing squeezed up against me. The risk is unlimited basically when you go short. You don't have a stop there. Granted, how earnings could be, fairly unlimited risk.
Yeah.
So with an option, I know what my risk is. If I want to put $10,000 into it, I'm not going to lose 11 or 20 ever. I'm only going to lose whatever's there.
I see.
So for earnings, I like options because the returns can be very, very high.
Yeah.
Especially if you find something with a high delta. So that Chegg play, they cost around $100 an option, and they had a 0.98 delta. Okay. So that means for every dollar Chegg moved down, I was basically making 100%.
Yeah.
They gapped down over $10. So I was able to make out pretty nice on that one.
I see. When you day trade, you don't risk all that 100%.
Yeah.
So when you swing trade, how much do you risk is what I'm saying.
So if I'm swinging, so that was an earnings play.
Yeah.
So when it comes to earnings, it's the probabilities you can be right in every aspect and still be wrong.
Yeah.
They can beat every line and then your trade's still wrong. So I stopped getting so convicted into these trades just because of the fact I can be right on every aspect, fundamentals, the technicals, future projections. All these aspects can be right. The report comes out, I look at it, I nailed it, and then I look at the stock price and it's down 20%. And that got to me a few times, having that big conviction. So now with the options, I usually risk a little more if I'm going to do earnings. And that was a opportunity with that trade idea to, that was willing to put on that extra risk because I knew what could possibly happen to Chegg. I knew that it could be extremely detrimental.
And it's more of almost like a fundamental play.
Yeah, definitely.
Okay. I use Benzinga Pro as my pre-market research tool. Let me give you a quick walkthrough of my daily trade planning process. In order to find large cap stocks with volatility to trade, I've set up a large cap gap scanner that only show me the stocks that fit my criteria. So this is how I set them up right here. If you go to the scanner section, you can go to filters. You can see I set up my price to be from $5 to above, market cap minimum of 1 billion, because again, this is a large cap scanner, volume minimum $20,000, and percentage gapper I sort with up. And you can see, once that's set up, you are scanning for the highest percentage gapper, that's large cap stocks overnight. The second step is to research a news catalyst behind these gappers. So on Benzinga Pro, I can easily go to the newsfeed after clicking the stock I'm interested in and determine whether the news is a positive or negative catalyst. You can see that for this ticker M, Macy's, it gapped out overnight because of really positive earnings report. Then you can really quickly see the EPS, revenue, and guidance results as opposed to estimates. One of my favorite ways to analyze earnings is go to calendar tab over here, and you can see earnings on this particular month, the actual earnings versus a comparison. You can see that's a huge beat, 950% surprise factor. Step 3 is going to be the most important step, technical analysis. And I'll plan out the key levels and determine whether I should be long bias or short bias on the stock. So this is how I make use of Benzinga Pro to plan my trades, from scanning stocks to news research and finally planning key levels. If you're serious about becoming a profitable trader, this is one of the very advanced trading tools that I recommend and I personally use. They're offering a huge 50% off discount for Humble Trader viewers on all monthly, quarterly, and annual plans. Use my link in the description below to get the Christmas deal. So on a day-to-day basis, when you're day trading intraday, do you utilize more fundamentals or technicals?
So both. Definitely always both, and macroeconomics a lot. So that's how I would consider fundamentals. Every week, some weeks there's more than others. There's always events coming out and key data points that Jerome Powell's looking at. To either hike rates or keep them the same or lower them. So once I kind of started seeing, okay, why at 10 o'clock are we breaking out a candle that's so massive? Well, it's because PPI just came out. Or new home sales or retail sales or CPI. Or why did we gap up yesterday? Well, there's CPI at 8:30 a.m., which brought the market all the way up. So I always like to look at the economic calendar when I'm trading to really be aware of what catalysts are going to happen this week and what times they're going to be at. Because it's not random. They happen at the same time every week.
Essentially, you're taking advantage of the volatility from the economic data release. I see. So can you walk us through, let's say, an example of that trade, and how would you execute, and what's the strategy like?
So for day trading, say I wake up in the morning, I know we have CPI 8:30. So I'm going to look at these numbers. I'll make my own projections based off what I see in the real world. What I'm noticing, are people complaining about what they're paying for fruit? Are they complaining about the grocery store prices? Are they complaining about gas prices? When I go out and I hear everyone's complaining about prices, I'll have a pretty hard assumption that CPI is pretty high up there and it's not going to be a good number. Bad number is going to bring down the market. So from there, I go to the charts. I look for my key pivots. See a key level. Wait for that key level. If it's before the news event, so it could be at 8 o'clock, I'm at a key pivot point. I know at 8:30 this news is going to come out. So if there's an opportunity there, I'll get in. I'll still risk a very low amount because we're playing news catalysts here. So it can really go, hammer candle against you or spike to the moon sometimes. So, knowing what to risk, doing this trade with no stop loss would be super risky. But getting in on a key pivot, a tight stop loss, knowing that in 20 minutes we're going to have this catalyst that should project for CPI to be higher, and which should result in the sell-off in the market. I'm able to be confident that, all right, I can get in 20 minutes early, be ready. I know that my stop's here, so I'm either going to, take a break-even trade, or lose a little bit, or it's going to work out, and I'm going to look like a wizard almost because at 8:30 that data's coming out, and every hedge fund is looking at this data to make it a pretty educated investment. So are they either going to be selling off, or are they going to hold it through it? And from there, sometimes I don't always like getting in before a news article or a macro event. This is the fact that it is really risky. So other times I'll like to say at 10 o'clock if I know something's coming out. That usually won't be as big of a mover as an 8:30 event. So at 10 o'clock it's coming out. I might wait for the news to come out, see what the numbers are, because usually we can see a big candle down and then it recovers right away.
Okay.
Other times you see a big candle down and it keeps going, or a big candle up and it just keeps going. So depending on where my risk is for the week, if I had a good week the week prior, I like to push it a little bit more.
I see.
Smaller week, I won't take those as risky trades, because getting in and trying to predict the market can be very profitable, but it also
risky
risky,
too. Yeah. Okay. On the topic of risk, do you mind sharing what's your biggest loss ever and then your biggest win ever?
Yeah. So my biggest loss was through a position with JP Morgan.
Okay.
Believe it or not. So this position, I had an options trade on. It ended up getting exercised while I was in college. So I was part-time trading.
Yeah.
But not really part-time trading. I was just buying things, big size, and then hoping it'd work out.
Okay.
So this position, I thought it was a great trade. 3 days into it, I'm down a substantial amount. A week later, down even more substantial amount.
Oh no. So it's a swing trade.
Yeah.
Oh.
So my biggest loss is from a swing.
Oh, okay.
As the trade went on, it ended up going down even worse. So I got to the point where I was in college and it was a lot of money. People around me were working all year to have this amount of money, and I just lost it in the matter of 2 weeks.
Yeah.
So it really kind of got to me. So I was like, I'm not trading the rest of this month. Close my computer, come back to my computer. Turned out they went in the money, and now I had shares.
Oh, okay.
So, and the shares were down a lot.
Oh no. So you lost money on the options and then the shares. Okay.
Yeah. And the shares were down a lot. So this is probably one of my most memorable trades too, because I logged on my computer and saw my account value was extremely high number, except the opposite.
Yeah.
Because it was all on margin.
Yeah. Oh no.
So, it was nearly $300,000 on margin that my broker didn't, come call me and say, hey, Adam, you sure you want to do this? No, they just decided, yep, you're taking these, you bought the contract, so here are the shares you wanted.
Oh no.
And that was probably one of the biggest eye-opening moments for me.
Yeah.
Because I realized that if I really want to make this happen, I can't let doing stuff like this take back months of work. So I'll work so hard to make this money.
Yeah.
And then just, walking away, shutting my computer off for 2 weeks results in such a massive loss.
Yeah.
I was very fortunate because I didn't just freak out and close the position. And unfortunately, my broker didn't close the position on me due to, how much size was on there.
Yeah.
And I ended up holding it for a little bit, and, it was pretty big loss. It wasn't anything crazy, like 6 figures.
Okay.
But, it did end up turning into a 5-figure loss still, which hurt a lot.
Yeah.
Except it could have been triple the size. I was able to hold it for a week, and thankfully JP Morgan was able to slowly make its way back up.
Yeah.
By the time I sold it, I recovered probably 60%, 80% of the additional after losing all the premium on the options, which was already
already
5 figures.
Loss, yeah.
And so that loss really got to me, and not only the money aspect, just it showed me how wrong you could really, you can think you're only risking a certain amount, and that's what I thought with options too. I didn't even know about exercising back then or trying to do that. And that experience was just turned into a big loss, which turned into an even bigger loss, which turned into a massive loss, which I was luckily able to hold on for a little bit and recoup it.
I see. What about your biggest win ever?
So my biggest win, I've had a few winners that have all been kind of around the same size. During the Ukraine war was probably my most recent really big win, which was last year. So XOM and wheat were the 2 tickers. So I was trading, I didn't know about wheat futures at the time, but
Wheat?
Yeah, wheat.
Oh, okay.
Like the commodity.
Yeah.
So on the actual exchange, they have an ETF for wheat. I didn't know how to trade the commodity then. And during the war, they basically cut off with Russia. They control a big portion of the oil supply, as well as Ukraine exported, I think, 40% of wheat for the entire world. So now they went from exporting 40% of the world's wheat source to having missiles coming at them. Just complete, insanity. So I knew this was going to mess up a lot of things. With this, as Russia started going more into it, and the war started to progress even more quickly, the oil lines started getting shut off. The wheat exports got shut down. So now all these millions of pounds of wheat that were getting exported, one day, not there, next day, not there, next day, not there. And I noticed wheat wasn't moving yet, and either was XOM. So I started looking at the options, and they had great deltas. They were super low premiums. So I started getting into this. And quickly they started moving. 100% day, 200% the next day, 300% the next day. And as I started, talking about it, more and more people around me started talking about it too. Started putting their money into it. So that trade, I'd like to think of it as one of my biggest, not because of how much just I made personally, but people around me made a lot of money too, which was a really amazing feeling to not only know each morning when I saw it up 100%, 10 of people I really care about around me were also seeing the same number on their screen. So that was a really amazing trade. It went like 2 weeks, almost every single day, 100% return, 100% return, 100% return. Till it hit the top a little bit. You saw a red day, saw the second red day, and we just called it there. And by that point, we already swung it for nearly 2 weeks. I swung it, and a lot of my buddies swung it as well. And that time I was able to leverage 2 vehicles off one trade idea because it was oil and wheat. So I was able to double capitalize on this.
Were you long the futures contracts?
So just options. So XOM and then wheat, the ETF for wheat.
So I didn't even know there's an ETF for wheat. So, are you guys interested in learning Adam's gap fill option strategy? Hit the like button down below if you want to see a video lesson in the future. Are there tools for trading that you use for like research, or what are some of your must-have tools?
So some of my must-have tools is I really like to use my broker's resources. So I started with TD Ameritrade, E-Trade to begin, as those were kind of the two. When I started 7 years ago, those were kind of the 2 main brokers you'd see. And as the years have gone on, they've been acquired by more prestigious banks. And their research is actually, if you're a client of them on the platform, you get all their research. So you can go right into the portal and go see every research report that Barclays puts out, that JP Morgan puts out, that Morgan Stanley put out, just by using your broker's resources. So that's something I don't think a lot of people realize they can do. It's something I definitely use a lot. Bloomberg is definitely my number one source. I just love it. It's entertainment a little bit. I somehow find comedy in it, but it's
spoken like a true trader.
I find myself laughing at Bloomberg sometimes.
Oh my god. It's funny. Normal people don't even want to watch Bloomberg. They watch it and fall asleep. You watch it and you find comedy in it.
People see me watching like, why are you watching the news? I was like, this is my TV show.
It's so funny.
So Bloomberg's awesome, and not only is it enjoyable to watch, they have really great sources there. You can see a bunch of CEOs talking about their companies, a bunch of hedge fund managers talking about what they see in the market, their opinions, and just hearing everyone's opinion in the market. I mean, you can watch it I watch it all day, but if you really just sit there and watch it for 30 minutes, you'd be surprised what you can kind of pull out of it, and even the ideas you can generate just listening to it. For a screener, I really like FinViz. It's free, so I've always been someone, I started, as a high schooler, so I didn't have, exactly a bunch of money to just be throwing in at all these, lessons and stuff like that and softwares. So I looked for a lot of the free things, and it's funny that even now I still am able to use all these free softwares. E-Trade, they offer Bloomberg for free, so I use the Bloomberg subscription through them. I have a trading account with them, so I'm not sure how it works if you don't have an account, but for them, I get to get that for free. FinViz, investing.com, I love that website. I have everything from commodities, macroeconomics, everything is on investing.com. It's awesome. That's a really big resource I would recommend as well.
Yeah, it's interesting because you don't really need to go that fancy with the tools.
Yeah.
I do use some premium tools, but I think for traders who are new to experience, like as long as you find whatever you need, like you don't need like to pay for like fancy tools.
Exactly.
Yeah.
The fancy tools like the Bloomberg subscription is over $20,000 a year.
Yeah, the terminal, right? Yeah. Of course.
So if you have a terminal, you're going to get an edge there for sure.
Yeah.
But if you can't afford the terminal and you want to use their free stuff, start there. Make it a little bit easier for yourself, and try to cut some of the overhead costs. At the end of the day, if you can cut overhead costs, you can kind of allow yourself more of a chance to succeed if you're managing your capital right. And when you do see the opportunity to fully put in, towards a software or a paid service, then you can hop in it. Save that money in the meantime before you really know what you're doing, as opposed to getting something and being overwhelmed and not understanding all the features. It can be a little difficult.
Yeah, that's what happened to me. When I first started, I had all these different scanners, especially like different subscription scanners, website research. I didn't know how to use any of them, so that was useless for me at the time anyways. What's your favorite strategy that you're trading in the current environment right now? And what kind of instruments?
So I like the indexes a lot right now.
Yeah.
Due to how I can size into them and not be worried at all about getting stuck in a position. So I really love the indexes. My favorite strategy for them has to be with gaps. I love gaps. They always say a gap always gets filled. And I might be one to say it does.
Yeah.
Because if you look at the probabilities, I love numbers, and like looking at numbers in the long run, gaps almost always fill.
Are you talking about gap up or gap down?
Both. So the gaps ups and down. I mean, depending on the company, I usually trade the SPY. So it's the 500 best companies. It's not going to gap down and never come back, hopefully at least.
True. Yeah.
So I look for it in reputable companies that gap down. That's a big thing, is companies that had something happen and that causes the gap, whether it's up or down, and then I look for them to kind of change it. So, have a big gap down, but now they're starting to come back out with good earnings. All right, now we're reapproaching that gap. That could be a great opportunity. Or if we gap up and now the company ends up messing up on something down the road, that's would be a really good time to look to get that gap to come back down after they gapped up. Those two strategies I really enjoy. So gap fill long, gap fill short.
I see. Okay.
As well as big trends in the market.
With options or?
Yeah. So options as well. They work really good, especially on the gaps, because implied volatility really starts moving once you get into these gap locations, because we don't really know how far down it's going to go. So if you can get a spike on the way down, the IV goes up and premiums just start jumping higher than you'd ever imagine. Sometimes I'll have a trade, I'm like, I'm aiming for 100%, but these gaps fill so viciously and so fast. Yeah. You'll blow through that profit target if you're looking for it.
Trading options versus stocks. Do you think it's riskier to trade options?
Yeah, I'd say options are more risky because there's more things you have to worry about.
Yeah.
You can buy a stock and be relatively safe over the course of a week, a month, a year.
Generally speaking.
Yeah.
Not all stocks. Okay.
Depending on what you're buying.
Yeah.
But with an option, they're designed to go to zero. And one of the best strategies out there is selling options. So it's collecting the premium. Exactly. It takes a lot more capital to do. But that's, they're really around for that reason. If you have some extra cash in your account, you want to generate some income, these big accounts, they're selling options all day, every day. Selling options, collecting that premium. Yeah. Because it's how they're designed to work. But if you can find those outliers that actually go at the money, go in the money, it can really start...
exponential returns.
Yeah, it's like exponential returns as compared to, just a stock position where I'm looking for...
which is more linear.
Exactly.
Makes sense.
Exactly.
Okay, so earlier we just talked about your go-to setup, your favorite setup, which is gap trading. Do you use any indicators to help you with that?
Not really. Okay. More of just the key levels.
Any price action reading at all?
Exactly. Or? So price action, where the gaps are formed. Okay. That's the main level I'm looking at to enter, because you can predict a gap fill, but reacting to one, you're going to find a lot more profitability and a lot more accuracy. predicting is a two-way street.
Yeah.
You can, make out really good, but you can take a lot of trades that if you would have just waited 30 minutes, you would have been like, why would I even do this? If I would have just waited, I would have never took this position. This would have been a dip buy. So I've kind of, especially with that strategy, became a bit more reactive. So if sometimes I do get a little anxious, want to get in this position, I see a great opportunity for a gap to fill, I'll get in, and then, goes back up, stops me out. All right, that's fine. Because then an hour later, when it actually comes back to that price, it usually flies right through it, and I'll get that 1 to 10 risk reward, 1 to 5 risk reward, especially with the options, how they're designed. They can, if you time the deltas right and get the right contract, right strike price, those things are going to fly up in value. So keeping that idea of losing small and winning big has really helped me with the gap strategy.
How do you plan out with options trading? Because I understand you're taking SPY puts or calls depending on the gap. How do you plan your entries with options in taking into consideration the key levels, the levels you talked about, and also the delta?
Yeah. So with the key levels, those come very important.
Yeah.
As when you buy an option, you need a strike price. So if I know the key levels, say 445, and I see that, okay, there's a gap at 445, that's the top of the gap, and the bottom's at 444. I look at the 445 calls, because I want something in the money. I won't go too far, or puts rather. I don't want to be too far out the money.
I see.
I want to be able to, I'd rather pay a little extra to get at the money, in the money.
Yeah.
I could exercise those to get shares at the end of the day that were worth something. We're just buying a contract.
Yeah.
So if it's not at the money, in the money, it's worth nothing when it expires. So that's kind of how I look at it is, all right, I'm buying something that has value right now. All right. If it's, trading at 445.50, I know that 445 is the key level. So I could look at the 445 calls, say maybe VWAP's at 435, and I say, all right, might be able to pull in a little extra here, get a VWAP entry, see it start coming towards the gap level. And also, once it gets to that gap level, my options go in the money. So now
I see.
My delta goes up even higher, and I'm going to get paid even better. So that's kind of how I'll look at the key level. I'll usually use that as my strike price.
Okay.
And then as it approaches it,
Yeah.
either add into it. Sometimes I'll do pilot trading. So I'll take on, a small position, just a couple contracts, very fractional size.
Yeah.
So use the pilot trade, and then once I have the confirmation, so the pilot would be at VWAP.
Pilot.
Yeah.
Oh, interesting. I never almost like a start in with a small position. Okay.
Yeah. So especially when it's a really big setup that I really like, I like to do this because it allows me to get a lot more size too.
Oh.
So
Okay.
I'll start with, it's supposed to be smaller size.
Yeah. When
but-
you first start in,
yeah.
right? Okay.
So I'll start, smaller size.
Yeah.
And then once I have as the confluences go in my direction, as I see VWAP get rejected, as I see 445 or 445.50 get liquidity swept now, I'm like, all right, a bunch of people just got stopped out.
I see.
As more of these confluences come, it allows me to say, okay, when we get to 445, how heavy we're going to hit this. And once it gets there, it just comes to, all right, is this setup an A++? Is it a B+?
Yeah.
Is it an A? Because I usually will trade like B+ setups to A++. That's kind of how I look at it.
Yeah.
So A++, it fits every confluence. It's, if I'm going for a short, it's a red on the day. It's below VWAP.
Yeah.
It broke the key level. The macro event was bad.
Yeah.
When it has all those catalysts and matches all the trend is downtrend, that's when I really will size into a gap fill short, and I see that and can really get into it. I know my contracts are at the money, about to go in the money.
Yeah.
And then I'll look to sell on a red candle if I'm going short, green candle if I'm going long.
Yeah.
And that's due to IV. So
Yeah.
you'll be able to squeeze a little bit more money out if you catch it on that momentum going down. The market makers price in that this could keep going lower. They don't know exactly how low it's going to go.
Yeah.
So there can be a little mispricing.
Yeah. Okay.
And that's kind of how I go about it, is using the pilot, sizing into it once it starts working, and then exiting once we get to that key level.
All on the same contract, the same strike price.
Yeah, same strike price.
Okay, so you add in, you don't roll out.
No, when I diversify too much, I've
Okay.
had worse red days when I over diversify.
I see.
So if I'm focused on 1, 2 stocks, sometimes I'll trade 3.
Yeah.
But I really like to be able to fully commit to this, fully feel how it's trading.
Okay.
Have that full conviction onto it.
Oh, do you ever use level 2 to help with the price action reading when it comes to options? Okay.
Yeah. So I'll use a level 2 just to kind of see, where are things coming down. So so I'll look at, for example, I'll look for my key levels. I'll see how level 2 reacts around that.
Yeah.
None on the options chain side. I'll just have a time of sales for options. So I'll watch the actual tickers level 2. So I'll see how it reacts to the strike price or the key level, because usually the key levels I trade off, I'll trade the same strike price. So I'll look to see, all right, is the bid getting hit and coming back down? Is it holding it?
Yeah.
How big are the buyers here? And then on the time and sales, I'll kind of see, all right, how much are people paying for this right now, and how many people are buying this contract? And from there, I don't think a lot of platforms allow you to kind of see the exact prices, at least not default. You kind of got to know how to set it up. So setting up to have that time of sales on your options chain and a chart on your options chain allow you to, I'm a visual learner. So when I see prices down or high, I kind of know, all right, this is a good opportunity here to get in for pretty cheap, or people are just throwing crazy money at this. And on the level 2, I'm seeing all of a sudden 100 lots going through. So that can be another 1,000 lots. Once I see those coming through, it's kind of like how I like to use level 2 in time of sales, to see almost like the dark pool data, seeing these bigger orders that are abnormal. So I see what's normal for it, and then I look for abnormalities, which may be a little sign that something big might happen soon.
And do you utilize the same method when you're planning your exit and your risk? Also key levels, or?
Yeah.
Okay.
So same thing. I use my key levels.
Yeah.
I like to get out when they approach them. I usually have pretty big ranges. So
for selling into target?
Yeah.
Okay.
Yeah. So my charts have a lot of lines across them.
Yeah.
I'll redo them every so often as, I start to see, okay, maybe this level is losing its accuracy or its power. But sometimes I can leave my charts and not have to do any work for a little bit. I can go a whole month without having to do any analysis.
Yeah.
I've already done it all last month, and we're in the same range. So I love when the SPY pulls back. When it was breaking out to all-time highs or going towards them, I started to get a little worried because I was like, oh, is my strategy going to work? I know how to trade in between the ranges.
Yeah. But when it breaks out, there's no top range.
Yeah.
Oh, I see.
That's back to the original strategy, though. The all-time highs and the 52-week high strategy.
Yeah. So in that case, do you still, back then you were trading stocks. So in this case, do you wait for pullback and get in on options now?
Yeah. So I like to, I'm not really that big of a breakout trader as much. I like the pullbacks. I just like precisions what really gets me in this game. Being able to say, okay, I think the top's going to be at 445.60.
Yeah.
And it's insane. If you do the right analysis, you really can be precise. People say you can't call the top or bottom. I beg to differ because I've done it time and time again. I didn't know for a fact that this was going to be the top or this was going to be the bottom by any means. But I did know that that price level is very important. And historically, for the past, sometimes I use levels that were 20 years old. I look back so far, depending on where the market's trading.
Yeah.
So you can get that level of precision because a lot of the things repeat themselves in the market. So I trust my levels, and I know now that they do have power. So,
it's interesting because you do look at both the macroeconomics, basically fundamentals, as well as the technicals.
Yeah.
It's almost like they probably are equally as important to you.
Yeah.
When trading and swing trading, okay.
Yeah, for both of them.
Yeah.
I like, especially when, start being really confident in your trades.
Yeah.
The more confluences there are, the more things that overlap, just allows you to be like, all right, why should I not take this trade? It's like almost, it's easier to commit, it's hard to even fathom, why would I not take this trade when there's so many things in this strategy that's been tested that you've been working on for so long? Just line up. And for me, when those work out the most is when I look at the macros, I know the economic calendar, I know all the fundamentals for the company or the economy, for SPY, the world, what's going on in the world. And then I use my technical analysis that most people, aren't as good at. Like when I was in college, I never saw anyone use technical analysis.
Oh, okay.
You looking for these certain levels, it was just, oh, it's pulling back, maybe we should buy it. No, it's pulling back to X price, this is a good buy.
I see.
And that level of precision just kind of, it drives you to always improve myself every day, you know, looking for this precision and trusting the levels is the biggest thing. You got to plan it. What I always say in chat all the time, plan it, stalk it, execute it.
Yeah.
So we make the game plan in the morning. We post all of our levels. We say, all right, we're looking at, you know, this week was 4,500 on SPY. When it gets to 45, you know, when it's above 4,500, I'll tell people straight up, I'm not interested in trading at all today. But when we're at 4,500, that's where I'm looking to either go long or short. I don't know what opportunity we're going to have today. I'm going to have to watch price action. But I can tell you that at 8:30 a.m. what my game plan is. So then at 10 or 1 or 3, when I make that trade, you can go back and say, all right, and I know all day I'm waiting for this level. So when it gets there, I've already took my shower and have the chart in my head.
Okay.
Yeah, it's something I like to do. I like to almost envision it before it even happens. You know, I watch the markets 24/7, so I know exactly what the chart looks like. I can draw down on a piece of paper most days.
Adam just shared a lot of secrets about how he was able to balance his full-time education while trading part-time. And I respect that a lot. Being disciplined and being strict with your routines is very important when it comes to trading. What are some other qualities that successful traders should have? And do you have any of them? Let me know in the comment section down below. So how many trades on average do you take per day? It seems like you're very selective.
Yeah, so usually around 4.
Okay.
That's depending if I get liquidity swept, which, you know, can happen sometimes. And sometimes I'm early on a trade idea. Not perfect, unfortunately. I wish I could master it forever, but I feel like I'm going to be learning forever in this industry.
Of course,
Which is nice, you know, if learning something new every day has kind of been my motto ever since I was young, you know, try to learn something new every day. And with trading, it's very much like that.
Has your risk tolerance changed over the years? From when you were trading in high school, then in college, and now out of college, how has that transitioned?
Yeah, so as the years have gone on, I've taken on more risk now, but I took on kind of silly risk in the past. You know, I wasn't really worried to go to zero. Now I have responsibilities, and you know, I don't want to risk ever doing that. So it kind of gets to the point where it's like, you know, you made out good. Do you just take it and run, or do you continue to keep compounding this and compounding it? You know, like Warren Buffett does. You know? So I've looked, you know, I try to look at the big picture now and see that this money, you know, if I can continue to compound it and just do what works, it's going to continue to grow past my wildest imagination. Because that's usually what it does. When I have a good trading day, I never wake up that day and say, today's the day that, you know, I'm going to kill it in the market. It's usually the opposite when I do that. It's, you know, I come back from lunch and there's an opportunity there that I was like, oh, wow, this is a really good opportunity. There was macros events today. Like, everything's lining up. This is right with my game plan, and then it just plays out. So, you know, having more responsibilities, and as you get older, there's, you know, more things you want to do, and you don't want to risk going into, you know, any issues. Once you already make it, you don't want to risk going back to it.
So we talked about earlier that we both have a mutual mentor, Oren. How did you find him, and what was your experience working with him like?
Yeah, so right after high school, I was on Twitter. So that was kind of Twitter, you know, it still is really popular for finance, you know. My Twitter, at least, has nothing but finance on there. I know some people's is probably a little bit different, but mine's is only finance. So I was on there, and Orain hosted a live or Google Chats or something. So I saw him post it, and it was like 10 people could join. So I see it as a young high school graduate. I'm like, oh my God, it's my opportunity. I join. And no one's saying anything the whole chat. So Orain goes and talks about his training. It's like, does anyone have questions? It's just silent for like 2 minutes. So, you know, I was like, all right, here's your opportunity. So I started talking a little bit and started asking questions. And he started asking me questions after I asked him a question. You know, that's kind of his way of teaching is, all right, are you asking me something that you can find out on your own? So quickly, I started asking questions to another question, and it turned into, you know, maybe we talked for 20 minutes on that phone call. No one else asked a single question in that whole call. So after that happened, I ended up DMing him, and I was like, you know, thank you so much. I really appreciate all the help. You know, I'd love to talk to you again. never really heard anything. And then like a week or two later, he reached out to me, and he was like, "Hey, I see a little bit of myself in you." So
Okay.
he's like, I want to help you out.
Yeah.
So he said, "Here's my Skype. A couple of weeks, I'm gonna contact you." So I was like, "All right." I added him, and I was like, maybe he'll message me, maybe he won't. And I'm almost positive the first call I get from him was a video call. So I was expecting maybe just message me, and now it's a video call.
Yeah.
So I picked it up, and we started chatting, and you know how it is sometimes with people. Some people it's a little awkward, and other people it's just like you've known each other your whole life.
Yeah.
And quickly we started chatting and talking about stocks, and he was so much more advanced from me. It was hard for me to offer value to him because I knew the only way he would help me is if I could offer some type of value for him.
Yeah.
He's it's good to give back, but it's always good to give back to people that are also looking to contribute.
Yeah.
I wasn't just looking to ask questions and not try to help him at all if I could. So we started, looking at stock research, and at the time I was really into stocks too. This was before I went to college, so I was just all day, 24/7. It's the only thing I cared about. Researching, sending him ideas, and the bond just slowly grew to talking about personal life issues, and him, mentoring me through stuff in my personal life. And as the years went on, we just kind of went less and less about just stocks and stuff, and more about actually building a relationship and talk about the market for a little bit, and then we talk about our own lives for an hour. So that all started with joining a Google Hangout, which is wild.
Wow, that's very different from how I found Oren. But I think eventually we ended up in the same Discord. I remember it was a couple years after I met him, he started putting everyone he's talking to or chatting with, and he just treats us as friends.
Yeah.
Right? So it was really cool, even though he helped us so much. Like he never expected much from us a return.
Yeah.
But I think naturally, obviously, when you do give back, the bond tends to become stronger.
Yeah.
Yeah.
Exactly.
So we all eventually ended up in a little Discord. I remember I was trying to hide the fact that I was female for a long time. Nobody knew. And then Oren one day found out. And he's like, "What? I never knew you were a girl." I'm like, "Yeah, well, I was trying to blend in." But yeah, it was a nice little community.
So how did you find that community?
Well, I was in a penny stock gurus program and there's a forum.
Okay.
Yeah, and Oren was big on there.
Oh, profitable.
Because
Okay.
because he shared so much.
Yeah.
Yeah. So eventually he left, and I was like, "Well, where are you going? I'm going with you." So that's when I joined and followed up and see wherever he went to a couple of different places after, but it ended up being we all ended up on the same Discord many years later. Yeah.
That's funny. That's how I found his Twitter, was through that.
Oh,
Yeah.
okay. He took his Twitter and his profit lead down.
Yeah, I know. They're all gone.
Yeah, but good memories from that little server. I met so many of a lot of them I lost. We don't keep in touch anymore. But I met a lot of people just to chat with every single day. That was fun.
Yeah, I'd love to reconnect with some of them because we're all so close in there.
Yeah.
Everyone was really on their grind, I guess you could say, and really passionate about it, and willing to show up every day.
Yeah.
Every morning, looking forward to it, and you're like, oh, where's so and so today? What are they doing?
How do you think being part of a trading pod or a community helped you when you are trading?
I don't think you can succeed without it, honestly. If you don't have like-minded or similar-minded people around you, I mean, everyone has their own dream.
Yeah.
You want to live your dream, not dream your life. That's one of my favorite quotes. So, explaining your dream to someone else, they might not mean to make you sound, a little out of it, because it's just not the dream that they have in their head.
Yeah.
So surrounding yourself with people that were given that same dream, is so important, because you realize this is, I'm not maybe crazy as some people may think of it, to do these extraordinary things.
Yeah.
There's people out there with the same goals as you. You're not the only one trying to, better yourself. You don't have to stay in this little pod your whole life. You can actually expand and take risks and be you. You don't have to hide it. And that aspect is really cool because, in the community, I always talk to people, and it's like, all right, we love trading, but then we also love eating food, and we also enjoy going out and seeing this. And it's it's really nice because surrounding yourself with like-minded people just it
Yeah.
motivates you. It keeps you more on point.
Yeah.
It keeps you more consistent, especially if you surround yourself with consistent people. You're gonna, you turn into whoever you surround yourself with. So if you're in a community with people who are doing good and they're following a trade plan every day, you're gonna feel like if you're not following your trade plan, you're gonna be like, all right, well, what am I smarter than everyone else? Like, no, like we're a team here. We should all be working together. And that's probably the biggest thing that I think retail traders struggle with.
Yeah.
If you go work at a bank trading, you're gonna have a boss over your shoulder.
Yeah.
And if you mess up, you start losing money. You don't want to follow your rules. You're just gonna lose your job.
Yeah.
When you're at home, it's like,
There's
you're gonna
no accountability.
Yeah.
You're trading on your own.
you're gonna fire yourself. Some people will, but some people won't.
Right.
So I think having that community of people around you is so pivotal.
Yeah.
It will help you so much. You don't want to tie into anyone else's ideas too much, but having that support system is so big for when you're up to remind yourself, right? You gotta not be get your ego too big here. You're on a good streak right now, but markets. We never know what the markets are going to do. They're going to stay irrational longer than we stay liquid every time.
For sure.
And it's easy to forget things sometimes. Even if you write it in your notebook every day, it's easy to forget what you wrote 3 days ago.
Yeah.
But if you have your buddy, to help you out, they'll say, hey, we just talked about this yesterday. Like, we're done trading for today. You shouldn't be looking at any more setups.
Yeah.
We've already took 3 trades. There's already been an A+ setup twice today. Maybe it's better just wait till end of the week when there's a catalyst that we know is going to move the markets better. And sometimes we forget that, but when you're in a community, in a good community at least, you're able to be reminded of that all the time. That's why I love our community.
Yeah. How long have you been trading now?
So 7 years now.
Okay. I think we met about 3-4 years ago in the Discord community.
Yeah, I think it was 4 years ago.
Okay.
About.
And is it true that you were still in college, or what's the timeline? Because you look really young. So when did you? What got you into stock trading in the first place?
So 2016, I graduated high school, and during that time, over the summer, I was working a summer job at a campground, and I was just a desk attendant, so I had a lot of downtime.
Yeah.
And during that time, I came across a video of someone trading stocks. They were very young. They were probably like 21.
Okay.
They were buying their whole family MacBooks. Which, who doesn't want to do that for their family? And it turns out he was trading stocks. Penny stocks was where I first started getting into things.
Okay.
So a lot of the cheap stocks. Not sure if you remember Dries, which was a big runner back in the day. Once I saw a move like Dries, I was just hooked because I saw the potential it had. I saw young people, old people making fortunes off this. So I knew if I really put in the time, I've always been entrepreneurial. Started a lot of little businesses. Growing up, I used to sell gum and mod Xbox controllers. So I knew, all right, if I can treat this like a business, maybe I can really make something out of it and have some freedom to, maybe buy my family some MacBooks down the road, or be able to just be free and not really stressed out as to what's the future is going to hold. I kind of have control of it on my own, which is something I always wanted ever since I was young, was having control over my own future, and not relying on anyone else for that power. So with trading, I saw that you can almost do it anywhere, and the returns are whatever you put your mind to, you can really accomplish with it. So during that time, I continued to just dig deeper into it. I had more people around me asking me, and they always on top of it. They'd hear about the stock market. I'd be the first person they'd text or call.
Oh, you became that guy in college. Okay.
Yeah. And when I got to university and I actually started living there, it was during the time of Kronos Group. So when all the marijuana stocks went public.
Okay.
And that was, kind of my first stock. That it was cheap too. I'd consider it a penny stock. I think it was around $7 a share when I first started buying into it. And everyone in college, they knew about it. And, next thing you know, after Kronos starts doubling up 100%, everyone's posting about it, Kronos to the moon. And
So was it more of a swing trade for you, or were you day trading at the time?
So yeah, during college, day trading wasn't really there for me opportunity-wise.
Okay.
I was waking up a little bit later in the day.
Yeah.
A little more tired in the morning, kind of, doing it half effort. And you can't go half effort.
I see.
If you're trading, you got to be 100% into it.
Yeah.
So I started doing swing trading because that's where I saw some better opportunity. I could go to classes. I wouldn't be, stuck behind the computer all day. I can go out and socialize with people and have friends and still, make some money.
Right. Okay. So you were trading part-time as a student?
Yeah,
basically.
definitely.
So what's the process like? How do you manage schoolwork and then trading part-time? Were you trading on your phone or laptop? How did you organize your schedule? So when you do want to trade, you are able to capitalize on the opportunities.
Yeah, so a lot of mobile trading for sure.
Okay.
A lot of my laptop fans going crazy in class where they're so loud. It sounds, like an airplane.
You're trading in class.
Oh, yeah.
Oh, my God. Okay.
Until my computer sounded like it was going to explode, then I would have to turn it off.
You have to snack under the desk and trading?
Well, in college, they were, you're paying to be there. So my teachers saw it and they were like, you can either pay attention or just throw thousands of dollars down the drain. And... I still learned.
Yeah.
But I probably could have learned more if I didn't have my laptop out so much.
Oh, okay. So when did you actually start to find profitability in trading? Was it during college or?
It was actually before college.
Oh, okay.
So before college, I was just living at home with my parents. My routine was very strict. Waking up at 7 o'clock, doing my pre-market scan, going for a walk. I also didn't have a dog at the time. So I was, very locked in, and I didn't really care too much about other people.
Right.
Which, wasn't, I learned, years later that shouldn't have focused so much. It's worth it, but people are also very important too.
Yeah.
And I kind of just pushed everyone out and, on my computer with a rain from, 7 a.m.
of course.
to 11 p.m. I'd see my friends once a week here and there and talk to them. But I was really just on a really strict schedule, and that drive just every single day, showing up, making mistakes, coming back at it the next day, back at it the next day, the next week, really just allowed me to learn so quickly. And I was very fortunate to have a mentor too who was very successful. So every day where I'd, end up losing when I was learning and wasn't consistent, I saw someone who had very similar ideas as me actually making it. So
I see.
It really made me say, all right, how are you failing here? And once I started journaling, I have so many notebooks upon notebooks of all my thoughts from, what I'm feeling, what I ate that day, if I exercised or not. And I quickly started to realize after maybe 6 months to a year is when things really started turning pivotal with all the journaling and having someone to, see my trades, talk to about, what I was thinking emotionally, how I felt, really just helped so much. And I was fortunate to start with a decent amount of trading capital.
That's good.
And I also had little side businesses before, which helped generate a little bit of money as well, and always working on the summer. So I wasn't in a place where if I lost the money, I had to pay rent, and I had to take care of my dog. I was in a place where I was willing to go all in, 100%. And I think that's maybe one of the reasons why I was able to succeed is failure just wasn't an option for me.
Okay. If you don't mind sharing with the audience, when you were starting trading, how much capital were you trading with?
So I started with 5,000.
Okay.
And then quickly grew it to over the day trading, PDT rule.
Oh.
And that's when I started. At first, when I go over the PDT rule, it was a little tricky because now I'm like, oh, I made it.
Yeah, you gotta be careful when you're just a couple thousand over that threshold.
Yeah. So and then that's when I finally get the first taste of kind of being a little nervous. Once I get over the PDT rule.
I see.
And then, after about a month or two, I realized, you got to treat it just like you were treating it before, Stop looking at the numbers, stop looking at your P&L, just trade the chart, trade the setup, and then at the end of the week, we'll look.
When you were growing your account from 5,000, because from 5,000 to 25,000, that's no small feat, right? This is the, 500% return?
Yeah.
Am I doing the math right? Yes,
yep.
I am. So what was the strategy, or which strategies did you lean towards that you think gave you that kind of risk reward to scale up your account?
So at that time, I was looking for mainly breakouts on the daily chart.
Okay.
Around all-time highs.
Yeah.
So a very simple strategy. Just would go on FinViz. It's like a stock scanner. I'm not sure if you're familiar with it. Go on there, look at all the stocks near their all-time highs. And I would just run through it. I'd usually, some days I'd get 20 of them, some days I'd get 3 of them. And, I'd watch for them to look at that level, see if there's any news catalysts. Because I started realizing, okay, if there's news, it seems like these stocks are breaking out more often and they're actually holding the previous all-time high. So if I can just buy at the previous all-time high, then I'll be decently good, especially if they have a good news source. So that was the first strategy I had.
Yeah.
Was just buying these daily chart breakouts, looking for all-time highs around there, or 52-week highs as well. And from there, just dip buying them once they would break it, or breakout buying them once they approached it.
It's funny because since we learned from the same person originally, that sounds so familiar. I remember we used to post charts in Discord. Like you will share it, he will share it, he will do videos on it. It just sounds so familiar. I'm like reliving those times when I'm just at home and like talking and laughing to myself on Discord.
Just looking for all these all-time highs and 52-week highs.
And that strategy still works
as
long as you are very like specific with your criteria and how you look for it. So no, it just brings back really, really good memories actually. Yeah, I know this is not about me, but I was trading part-time. So I still am on the West Coast. So I always used to be so envious of you and Oren. Like you guys can stay on and trade when I have to leave at 8 o'clock my time. That would be 11 o'clock Eastern. Yeah, I remember those days.
Yeah, the East Coast was nice. And Oren was in Jamaica for a while too, so he even had even earlier time.
Oh yeah, that's true.
I think he had he got to sleep an extra hour.
Oh, lucky guy.
Yeah.
What degree were you studying in college?
So I have a bachelor's in finance.
So I heard, I didn't go to college for finance, but I've heard that it's a very, very stressful degree and program to be in. What challenges did you face when you were studying college, and how did that affect your trading?
So the timelines was something that was a little bit new to me, as trading. Kind of set my own timelines on things, and
you had more flexibility.
Yeah, it was super flexible. So then when I started going to college, having to be in the routine of being at class, and if I miss class, now I'm going to fail in my classes because it's really important to go to class. If you want to learn things, it's hard to not go to class and just read the book. As you have a teacher there, you can ask them a question, get solved. The biggest challenge was the time management.
Yeah.
Every time I was at class, I was thinking, I should be trading, why am I here? So I'd be talking to someone sitting on the side of me, showing them the stock, and they're like, oh, should I leave class right now? And they're like, I don't know, you tell me. And then it started turning into me leaving class 3 times a week to go trade.
Okay.
And quickly, the schoolwork went down a little bit. But, my parents really wanted me to go to college, and I have a lot of younger brothers, so I wanted to set the right example.
Yeah.
And that was, in the back of my head every single time I wanted to give up on college and say, this isn't meant for you. I wanted to prove to my family and my brothers that, whatever you put your mind to, you can do it, whether it's college or trading in the stock market.
I see. Okay.
I'm big on when something challenges me, I try to really go for it and prove to myself that, hey, it's not impossible. If you think you can only run a mile, let's see if we can do 2.
Yeah, I was going to ask you, how is it hard to take your classes seriously when you're already making money from trading? How do you make money from trading and still go to class, right? What's the mindset?
Yeah, so at first, the first 2 years, it's very generalized studies.
Yeah.
That part was extremely hard. Because, I'm taking English classes, and I'm taking a history class, and an astronomy class, which is cool. But, I can just read.
How is it going to help you trading, astronomy?
Exactly.
Yeah.
So it was difficult at first with those classes. And luckily, I had some people around me who, kind of kept the bigger picture in mind, and pushed me to, keep going. And just being myself, I'm pretty competitive. So my buddy, he had a 4.0 GPA. So I was like, if he has a 4.0, I got to get very close to that. And that was a big motivator, was, surrounding myself with people who had the same vision as me, and they were still in college.
I see.
So that was huge in helping me, seeing them show up. I'm like, all right, we can show up and do this. There's people out there who are trading and staying in college and, keeping this plan B, as I always thought of it, is, if I blow up all my accounts, at least I can go work.
I think that's a good way to think about it.
Yeah.
So now that you've completed and you've gotten your degree from finance, I get a lot of these questions from viewers on my channel in the comments. Do you need a finance degree to day trade successfully? Can you answer that for us?
Definitely not.
Oh, okay. Did it help at all?
It helped give me perspective as to how kind of bigger money thinks.
Okay.
So what they're looking at, where they would be buying. So now it correlates now to where I'm trading is I'm looking to get in where I know institutions would be getting in.
I see.
The certain prices that they look at, the certain patterns or trends in the market, certain macro events around those. So that it can give you an edge for sure, especially, seeing how it's done. It can show you a lot of good sources as to where to look for information, where other people are gathering information from. So instead of, just going through a bunch of news articles, I just like to watch Bloomberg now because nearly every big trader has it on their TV all day and they're just watching it. So if I want to stay up to date with all the latest things, go on Bloomberg, see what they're talking about.
Yeah.
You go over to the market and usually those are the ones that are really moving.
Is it true that with what you learn in finance, there's a lot of research and a lot of finding out where things are undervalued? Would that be really beneficial for swing trading, like the whole longer time period than day trading?
Yeah, so if you're looking to get into swing trading, I think college is a phenomenal place to go, as it teaches you portfolio management mainly.
Okay.
So in school, they'll never teach you anything about options, or at least at my school. We
Not
didn't.
trading options.
Yeah, never, not even, to hedge with them, never mind trading them.
Oh, okay.
So I never learned any of those things. There's more like models, a lot of models, using Excel so much, going into all these assumptions and, looking at the risk-free rate, all these little things that I never heard of as a trader. But when I went to college, like, oh, what's the risk-free rate? It's the rate that the bank's paying to borrow money.
Okay.
So if they're paying more for the risk-free rate, then we know that they're not going to be making as much money. But if it's very low, now these tech companies can borrow money for pennies on the dollar. So kind of seeing those little things, I never thought like that before. And after I kind of started hearing these terms and these evaluations and what they really look at with interest rates, especially now with Powell and inflation going on, all those things are talked about in college. So
I see.
macro, microeconomics.
Yeah.
You have a whole course on those, especially if you're a finance.
I see.
So that aspect, for swing trading will help you immensely. Looking at economic calendars, knowing that next month's FOMC.
Yeah.
Our earnings is coming up in 2 months. Maybe we should look to get out of this position before it actually releases. And looking on that timeline and understanding how portfolio is very structured.
Yeah.
There's certain percentages for everything. That part of it really can help so much because you understand, all right, most firms, they're not 100% invested in tech. Most of them are 10% in tech, 10% in some oil, 10% in some consumer discretionary.
Yeah.
A little bit of everything. So that aspect of it has helped me so much for my swing trading.
Interesting. Now that you make me want to go to college again. When did you officially transition from part-time trading to full-time? Is it after college?
Yeah, so after I graduated, kind of had a little bit on my plate. So now was the time to either go join a big bank or fully dive into my own trading career, which kind of seemed almost like a suicide for my family, how they considered it.
About trading?
Yeah, because everything you hear is just, you'll make this money, but, they've seen the risk. My family's, they've seen, it's hard to hide, especially when you're getting started. So they knew how much it would drain me, how much time and effort I would be, tired up all night and just night after night after night. Some days I used to be very egotistic and, try to just lose and then keep going after it when I had some downturns. So my family, they've saw that and they knew there was opportunity and they've always believed in me.
Yeah.
But parents want you to take the safe route.
That's true. Have you thought of just sharing how much money you made with them from trading so they can see the potential?
Yeah, I mean, they've seen it.
Yeah, but they just think it's too risky overall.
They believe in it, but they also, they're very structured. So
I see.
I feel like sometimes, maybe they would see how I'm going about, trading and they think, oh, that's, what's the longevity in that? Always seeing what's the true longevity. Because they're not, they haven't put in the thousands of hours I have, every day for the past, 6-7 years, really just being fully into it. They never got to, see that side and they see the opportunity, but they, I think after I went to college, they wanted to set more of an example for my younger brothers to go to college. It's not a bad
and get a real
gig.
job.
Yeah.
Real job.
You can make good money. You can make 6 figures pretty quickly if especially if you get into finance,
Yeah.
work hard, in a year or two, you're going to be making that type of money.
Yeah.
So guaranteed with insurance, all these benefits, a 401k match, which to the average person sounds amazing.
Yeah.
To me, it just sounds like compromising and kind of an incentive to keep you in the rat race a little bit.
Yeah.
So that's where I couldn't let that and anyone's opinion really change what I was going to do after graduating college.
Yeah.
So I went on a little trip to Europe to see where I was from, met all my family. It was really amazing. I just went with me and my grandmother. So it was very, seeing all my family, meeting them, seeing the origin, seeing how people in the Azores live off $500 a month. I realized I could be happy making $500 a month moving here trading, and I know I can do that. So that's when I really decided, I'm going all into trading.
Do you have any financial goals?
Yeah, definitely. So I'm still very early in my career for trading. I learn new stuff every day still.
Yeah.
I'm a student to the markets, for sure. I love learning new things. If I see someone with a new edge, I'm going to learn their edge, because that's how my strategy kind of started, was learning what everyone was doing and seeing what worked best for me.
Yeah.
So I definitely want to kind of try to continue to build my wealth. I'd love to really become, maybe run my own fund one day, which is a big goal, but I've seen how it works. And, when I have trading friends, it's like, hey, what if we, all get together and, you trade this, I trade this, you trade this.
Yeah.
And then we just pool our money. And, while you're swing trading, I'm day trading. And while I'm day trading, you're selling options. And the idea of running something like that, just because I've learned so many strategies over the years, it makes me want to, I know there's a lot that can be done with it. And I think the best way to capitalize with that is, really creating a team or being a part of a team.
Yeah.
That we can all push each other and, make a difference financially for everyone and be able to, make the world a better place in a way. I feel like money can allow for that. And that's why running, like a hedge fund or something would be really awesome.
Yeah. Where do you spend your money?
So I spent a lot of money on designer stuff for a little bit.
Okay. You mentioned fashion earlier.
I used to really love fashion a lot in college. I was super into the hypebeast trend. It was like Supreme. Okay. What the young kids love. Okay. Yeah. But traveling for sure. Traveling, I love eating out. Really big into good food. So I love experiences. Like, you can't put a price tag on experiences.
Yeah.
So, everything I bought that was, material, I quickly started realizing, like, oh yeah, this is cool and stuff, but unless all my friends can have it too, I just kind of, what's the point?
Yeah.
So a lot of my money goes towards just kind of traveling, experiences. I like to just do whatever's out there. And if it's a cool experience and someone, like, hey, let's go do this, I'm not going to say, oh, I can't do that, It's going to be kind of expensive. I'll be like, all right, yeah, like, let's do it.
You're not into cars? No Lamborghinis for you?
Well, I am into cars.
Oh, you are? Okay.
Definitely a lot of money. I have a BMW. So that has taken up a good change of my money.
Okay.
And I also have a really big dog who is a troublemaker.
Pets cost a lot of money.
Yeah.
Especially if you obviously want to take good care of them. Yeah,
exactly. Every little thing, you go to the vet nowadays, it's insane. Yeah,
that's why you need pet insurance.
Yeah. I should have got that a while ago. But I think it's like when I went to get pet insurance I went there, I'm like, yeah, I want pet insurance. And they're like, oh, well, he has all these problems, so they're not covered. I was like, oh, what's the point?
That's such BS. Okay, I see what you mean. Any messages you want to tell our audience watching this?
So I'd say, for any upcoming trader, especially if you're young, there's a lot of distractions in life.
Yeah.
As you level up, you're going to learn that there's new distractions. So as you find success, there's going to be a new distraction that's going to try to take you out, whether it's relationships. So your discipline is going to be the number one thing.
Yeah.
Consistency, showing up every single day, forcing yourself to get out of bed, forcing yourself to at least watch it. You'd be surprised, you might feel like, man, like I'm the worst trader ever. And then that turns out to be the day that's like pivotal to your trading career. It's no rocket science.
Yeah.
You just got to take the certain steps to get there. So if you do the steps and at the end of the day, anyone watching this, you know if you're doing the right thing or the wrong thing.
Yeah.
At the end of the day, you're going to go to bed and you're going to say, I could have did better today, or I did everything I could. And if you go to bed every day saying, I did everything I could, and you believe that deep down, you're going to get there eventually, because you're not going to let yourself down.
Yeah. Very true and very applicable to trading.
Yeah.
Thank you so much, Adam. Where can people find you?
Thank you. If you guys want to follow me, it's Adam Raposa on Instagram. That's kind of usually how I post most of my stuff. And if you want to follow me on there, that'd be awesome. I really appreciate it.
Thank you so much for being on the podcast.
Thank you.
Thanks, Adam. In my conversation with Adam earlier, we mentioned our mentor, Oren, several times. He was very crucial to my journey to become a profitable trader over time. And guess what? I also just did a podcast interviewing Oren, my mentor. And you can watch that over here.